Good afternoon, ladies and gentlemen. This is Greg Michalowski from FXDD, and this is the Thursday, March 25th New York Midday Forex report. Let me remind everybody that the trading Forex is risky and should only be done with risk capital that will not change your lifestyle. Traders could lose all the risk capital trading Forex. FXDD does not guarantee any recommendations made within its commentary. Traders should make market assessments and take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance, although care is taken as correct in this report. FXC does not guarantee the accuracy of the information. The markets are correcting here today after yesterday's stronger dollar, but the correction here in the last hour or so, half hour or so, the market moved sharply higher against the euro. The euro versus U.S. dollar moved higher, sterling versus U.S. dollar, but ran into some sellers, and the impetus for the move higher has been continued rumors about what may come out of these meetings in regard to Greece, but the expectations are becoming less and less of what may happen, and also you have to think about the implications of what may happen later on. In regard to confidence in the euro, in regard to growth in certain countries within the euro region, if austerity programs are going to be enacted, then spending should go down, employment might go higher, unemployment might go higher in some of these countries, and this is not necessarily good. So we are seeing the market recognize this and probably try to sell the market off. Taking a look at the euro versus U.S. In the earlier report, we're looking at the 77 level, 133.77 level as a key level. That was the high price that came in yesterday afternoon at 133.77. You can see the market moved above that level, moving to a high of 133.82. Now, the other level that we were keen on was the 133.92 level, and that comes off the 5-minute chart, taking the high from this point right here down to the low that we saw down here today at 132.83, and that 38.2% retracement level comes in at this 133.92 level. And so when the market got up to 87, we saw sellers immediately in the market, and has pushed the market back down toward our support area, toward our 100 and 200 bar moving average here on the downside. The other support level that we had that the market was holding against too was this 133.14 level. That was the closing level from yesterday, and that is holding the market, held the market on the downside. So we found the buyers here against the low on the break of the 100. We found the sellers here against the high, and that's what I call consolidation phase after the market has a trend to the downside. So the bias to the downside remains for the euro versus U.S. dollar. Watch their moving averages, watch our key levels to give you clues. Watch this 100 bar moving average. We move above, we could see further moves to the upside, but and if we move below here, we should see further moves to the downside, but we're going to have to get through this 133.14 level on the downside. Let's take a look at the sterling versus the U.S. dollar. And from this perspective, the market earlier this morning went up to test the 100-hour moving average. That was such a key test at the top side right there. That was important. Then the market in the New York session started to move back below this old low here, back below this 143.30 level. So that keeps the bias to the downside for this currency pair. Now we do have support against this 148.70 to 148.52 level down at the lows here. So we are seeing the buyers come in against the lows. So that's positive for the currency pair, but the bias remains to the downside off this hourly chart, and I like the fact that we held the 100-hour moving average. Now taking a look at the 5-minute chart, this spike up that we just saw in the last half hour trading, where did we go? Went right up to the 200-bar moving average. You can see it right here. The green line in the chart went right above to that level. Also went up and tested the 61.8% of this move up here today came at the 149.13 level. So we had a couple of reasons at this level, but really the 200 bar moving average held like a charm. You can see the market is well off of that level, but we do have support against this lows here for at 148.65. We have a lower low earlier in the day at 148.52. So we are finding the support down, but definitely we're seeing the sellers above. Taking a look, transitioning to the Dollar versus Swiss. This currency pair is down on the day, but we are seeing some consolidation here, some choppy type trading off the hourly chart. On the 5-minute chart, we're seeing a similar type action. The market stayed below the 100-bar moving average here, moved above it here, came up to the 200, then moved above the 200, but only to come back within the goalpost when the market failed. At this point, really the third time through this 100-bar moving average, it moved down to the lows, but we are finding this support against the prior low for the day, and the market has moved back up, moved back above the 200-bar moving average here, only to fail again, moving back or testing it once again here. But it does seem like the dollar Swiss is in a very choppy, consolidated type phase once again here as the market tries to digest what's going on for that currency pair and basically consolidate the gains from yesterday. The dollar versus yen, however, continues to move to the upside, trading at 92.70 now, moving closer to this 50% retracement level of the move down from the 2009 high to the 2009 low. That level comes in at 93.12, currently pricing at 92.70. Taking a look at the hourly chart, you can see how the market's moved higher, and we've also been able to maintain the price well above the 91.55 level, which is the 200-day moving average. That has been key today. We broke above that yesterday and moved higher. We also had good support at the 90.72 level over time here that we broke above, and that started this whole run to the upside. But the bias it remains to the dollar yen to the upside, with the target looking for this 93.12 level on the top side. For the 5-minute chart, where is our risk? And you can see that the market has continued its trend to the upside here for the dollar versus yen. If we put a Fibonacci, let's just put a Fibonacci from today's low to today's high, since we're having another trend to the upside. Eventually it's going to run out of some steam here, and we could see a retracement. That retracement levels that I'd be concerned about are this high right here at 92.60. I would also be looking at this low right here at the 92.53 level. Also corresponds with this level. I'd probably use this 53 level as a key support level on the downside. If the market breaks through that 73 level, we could head on down toward this 38.2% retracement at 92.36. This 100-bar moving average is also moving up to the upside here, which should catch up if the market should come down to that level. Dollar Canada. We're looking at the 100 and 200-bar moving average, came down to the 200-bar moving average and bounced off of that level. Nice bounce off of that level, good support, and the market is back above the 100-bar moving average at 91.96. Currently, the current 100-bar moving average is at I'll get it. Yeah, whatever. A little bit lower, 91.90 in the dollar versus Canada. So as long as the price can remain above that 91.90 and stay out of this goalpost region, then we should see the market continue its move to the upside. On the 5-minute chart, let's see the bias on the 5-minute chart, and we are running against resistance here at 91.98. So we're going to have to get through that level. So really, we have support at 90. We have resistance at 98. It's time for the dollar Canada to make up its mind what it wants to do: go lower or does it want to go higher? The Aussie versus U.S. dollar has corrected here today, but staying below the 100-bar moving average at 91.44. Currently price trading at 91.24. The high went up to 91.39, holding that resistance up against the 100-hour moving average. That's a negative for the currency pair, but we'll see how the market reacts here in the afternoon on that currency pair. So that's my midday report. Wishing everybody good luck. I'm going to be sorry for not putting any more comments on the site. I'm preparing for the Compass FX webinar this afternoon. I'll be speaking at 1:30 this afternoon. If you're scheduled to participate in that, note that it is 1:30, so in less than an hour. And I look forward to that. That if you want to register for that, go to www.compassfx.com. And there's a link there to sign up. So we'll talk to you later. Bye-bye, everyone. Good luck with your trading. Good fortune. We'll talk to you later. Bye-bye.